Good morning. Can you hear me? Andrian Kamau, confirm you can hear me. Bessie?
Yes.
You can hear me loud and clear?
Yes.
Wonderful. So thank you, class. Without further ado, we are supposed to start our session. Our topic today will be on appropriate institutional structure. Remember, in our first topic, we went through the origin of microfinance, or the small credits, as they used to be called. We went ahead and looked into the pioneers of modern microfinance, the likes of Yunus and Grameen Bank, and how they started in Venezuela. Then we went to the People's Republic of Indonesia, and we looked at the BRI, or the Bank Rakyat of Indonesia. Then we checked into the aspects of the credit principles, savings principles. Finally, when you log in, mute yourself to avoid interrupting the class. When you log in, mute yourself. Then we checked into the institutional requirements for the financial self-sufficiency, and we showed the 4 levels on how the institutions come of age and they become autonomous, or we could say semi-autonomous. So in our second topic, we will examine the benefits of institutional savings. It is better to be in a structured institution than to be in an informal microfinance. So we want to check into what microfinance institutions or organizations can do or adopt to become appropriate institutions of finance. So by the end of this topic, we need to understand or be able to identify the various policies that can be adopted in promoting suitable or progressive microfinances. So that is what you are supposed to cover today. And without further ado, we can go on as other people log in. We'll find out somewhere on the way. Well, we are looking to the expansion of the financial services for the micro enterprises as outlined in our topic 1. And we are indicating here that the expansion for micro enterprises can be realized through the 3 arrangements. And the first one is through linking the non-governmental programs to sources of finance. If you recall, we said that many micro enterprises, I've said when you log in, mute yourself. It won't be useful for you to keep on interrupting the class. And this normally happens to the late comers. You are coming late, you are interrupting others who joined early. People like Irene Gigi logged as early as 1:45. So kindly, when you log in, it is only prudent if you mute yourself. Actually, you are supposed to mute yourself before you log in. So when the system prompts you to either make the call over internet. You are supposed to mute yourself at that point. Well, those are just basic etiquettes. So we can go on. I was indicating that most microfinances, and we could see they started as informal groups, and most of them were run by NGOs, which means they are not in a position to become true financial institutions that finance their lending largely from deposit. Now, when we look into a legal financial institution, we are talking of a deposit-taking microfinance, which needs to be cleared by the central bank or the Federal Reserve, depending on the region that you are coming from. If it is from Europe, you are supposed to be cleared by the European Union. If it is America, you are supposed to be cleared by the Federal Reserve of the United States. If it is in Kenya, they're supposed to be cleared by the CBK. So what we are saying is that they may face legal restrictions because they are not allowed to start taking deposits. And that is the biggest challenge. Well, they may decide not to go on and get those added responsibilities of handling individual deposits. So they continue running as NGOs. So the future of such programs now depends on the ability to forge funding relationship with formal financial institutions. So it is either you become one or you organize yourself such that you can be able to get access to the financial institutions and get the funding or the sources of financials. So the simplest arrangement is for microfinance programs.
What does a gynecologist do?
Now, how do we treat such people? Jeffrey Kipnach, can you hear me? Jeffrey, can you hear me? Kindly mute yourself. Now we can make use of the 3 buttons down there and make use of the chat feature in case you need to air out something. You can make use of the 3 buttons, and these are big class. That's why it pains me when someone logs in and they remain unmuted. Juliet. Anyhow, it takes some time to set the climate, especially if you are dealing with people who are not cooperating. We go on. So I was indicating that it's either the NGOs take a very strong step of now forgetting about their being non-governmental and taking now the progressive measures of now going ahead and registering themselves. Alternatively, they can make arrangements with the existing formal financial institutions for a funding relationship. And I'll say the simplest arrangement will be for the micro enterprise programs to finance the lending either by borrowing from the commercial banks or continuing to get money from the donors or the grantors who are giving them the resources. So in order to be able to borrow in this way, then the micro enterprise programs must meet 2 stringent criteria. And the criteria that we are talking about here is the first one, they must be able to repay. For you to access credit, you see you have to show cause to the financial institution that is willing to extend that credit to you, that you will be able to pay. And of course, paying at the acceptable, what will I say, arrangement. We know that our financial institutions in Kenya, most of them, we are expected to be doing monthly repayment for the facility that you are getting. So if you are in an NGO that, let's say, receive quarterly grants from the donors, it will be challenging, unless they say partly whatever they are receiving will be channeled towards the repaying of the debts, which doesn't make a lot of financial sense in economics. Secondly, the programs must be able to assure banks that they are credit worthy. So you can imagine we have an NGO which is headquartered, let's say, in UK, but you want to expose it into the lending structures of this country. What does that mean? We need again to go back and collect the history of this NGO to see how it was performing. And the challenge will be if they are coming from a country that doesn't track the credit worthiness. Of course, our NGOs, most of them coming from progressive world, those countries normally have the credit reference bureaus that normally track the credit worthiness of such NGOs. So that is very fundamental, the two steps. First one, you must be able to show that you are able to pay. The second one, you are supposed to show that you are credit worthy. And some of them will need to be cleared through what we call the notaries. So you can imagine sending the documents for clearance through the embassies of various countries is a tussle. Now, the second one is transforming now the programs into specialized financial institutions. So you'll find that these micro enterprise programs, they are carried out by a variety of institutions, some grant-oriented NGOs, and some are seeking or striving to get what we are calling now the self-sufficiency. Now, these institutions must undergo the several changes to become financial institutions that could engage in lending and capturing deposits. And in Kenya, for you to be a licensed bank or a licensed MFI, DTB, or microfinance that is deposit taking, or a deposit taking bank, you need to undergo through the checks and balances by the regulator, who is now the Central Bank of Kenya. So the first one, you are supposed to be a registered, or you are supposed to be a legal person by way of registration. So all the banks are supposed to be limited companies. And they are limited because of the nature of operations that they are in. If you are taking some people's money, then we need you to be a legal person, such that if anything happens, we can sue you. Or if anyone is trying to joke around the operations of your operations, you can sue them. So it is two-way. So the first one, you are supposed to be a legalized structure. For you to formalize, you are supposed to be registered and get the certificate of incorporation. That is not enough. You need to go ahead and get cleared. For you to be cleared by the governor of the central bank and the CS of Treasury, there are those standard checks that they are supposed to do, to up and including if you are an individual, or if you are, let's say, several individuals who need to form a deposit taking MFI, they need to have your financials for 3 years, and they'll do a deep scrutiny to ensure that your credit worthiness is standing and you can be allowed to take people's deposit. Remember, we are trusting you with people's money. So for us to trust you to start taking people's money, it must have started with you first. So they'll do audit of your financials for 3 years. If it is a legal person, because some banks are operated by companies, we need now to see or expose the 3 years financial statements of those bodies or the legal persons that need to come together and register their micro enterprise. So it is not easy. So at the structural level, these institutions must reorganize to provide both savings and credit in a manner that will show expansion. So again, we will want to know what is the source of the shareholders' equity. And these are some of the requirements in the international treaties. We don't want a drug baron to come in Kenya, and that's why that's where they are hiding the process of crime, either being involved in drugs. Some are running terrorist groups. Some are doing money laundering. To ensure that that is not happening, all these checks and balances have to be done. And most people avoid this. So at the first opportunity, the organizational structure must be modified to support the capturing of deposits and the provision of credit. Remember, those two objectives is what the MFIs will be seeking to deliver. So the goal of any MFI will be deposit taking, and 2, extending that deposit as a credit to customers or groups who needs it. And of course, they are going to charge them something small in form of interest for them to expand and meet, of course, the day-to-day overheads or the operations of the particular MFI. So the functions and the makeup of each department as well needs to be shown. So as you transform now these specialized financial institution, we need to see how the departments will be formed, and there are key departments. For example, in the bank, we will have the operations department, and they will be in charge of the day-to-day activities of the bank. A customer walks into the bank, they need to open an account. There should be someone at the front office who is receiving that customer, dishing out the forms, assisting them to fill etc. If they need to process a card to be accessing now the account through the ATM, operations will be in charge of that. Then we need to have the back office that is doing the support. And almost of it will be taking care of the compliance. And when we are talking of compliance, is to ensure that the know your customer was done at the front office before these accounts are opened, or before we do before we accept your money, are we able to do the basic KYC? KYC is know your customer. Because at times, someone can even go down there, steal an ID, come and open an account very fast. You know how the fraudsters operate. Let me give you a case. There was a time when the lending industry, the banks became a bit flexible, and they could do groups or what we call the scheme loans. So kama ni security officers wanashikana, if let's say they are coming from KK or Wells Fargo or G4S, the bank will be organizing. As long as they agree with their employer, ule soja yeyote yako na payslip, tutakuwa tukimpea credit. So there was a lot of fraudulent loans that were being dished out because these soldiers were stealing IDs of their fellow soldiers. They go ahead and fake the payslips. Now you can imagine, if you are in the same job group and I'm able to steal your ID, I can do anything else that the bank needs. Payslip niko nayo, I'll need just to go somewhere in a cyber cafe na ni process, niende kwa jamaa wa stamp atengeneze stamp na nilete hizo documents kwa bank. So I'll quickly open a bank account, get the credit. Some were getting even to a tune of 300. Alafu nikishapata loan yangu niwache kazi. So when the first payment is being deducted, nani atakatwa hiyo mshahara? It will be deducted from the actual person. So the fraudster is gone with the money. So to avoid all these things, we have what we call the compliance department. And of course, then we have now the credit function. Credit function of the bank will be doing now the lending. So these are the people who will be doing the underwriting, they'll be doing the analysis to see whether you qualify or you don't qualify. And then from there, they go ahead and issue you credit. The final and the most important department is the cash monitoring unit. Of course, this responsibility is given to the manager to ensure that the cash is available and as and when it is needed in the branch. So asubuhi ataangalia what is in the safe, jioni ataangalia what was in the safe when we are closing. So that is a duty that is supposed to be carried out by the manager to ensure that the branch is liquid. We don't want a situation where customers are working in the bank and there is no money to give them. Very soon, this can easily make you be considered as a bank that is malfunctioning. Unaweza jipata either getting the penalties to happen, including being put under receivership. If you cannot monitor your daily turnover, then it becomes very hard. Now, the second one, the second structural change that is required for the organization is to use some form of franchise, or what we call the branches. If you become a financial institution or an MFI that is taking deposits, we don't just expect you to be in one place. So you are supposed to start thinking of expanding and opening branches. So you go down there and open branches. The reason why I'm talking of franchises is because there are those MFIs that will go under an already existing financial institution. For example, a big bank like Cooperative Bank of Kenya, they operate what we call the cooperative SACCO for the farmers. So this, in the branches, you'll find a counter or a till for the cooperative SACCO members. That is what I mean by the franchise. And when I'm talking of the branches, you could go now in the, depending on how your customers are populated, where they are densely populated, it will always be reasonable for you to have a branch there. So we need this structure to be in a manner that is adequate and decentralized to ensure that customers can easily reach the facility as and when they require the services. Now, one reason why members will not be interested in your MFI, if I'm supposed to board a matatu and pay, let's say, 200, 300 shillings before I come and take credit, I won't be interested. I'd rather go to the MFI that is next door, nichukue my credit, na wakati wa kulipa itakuwa easier because I'll be just walking to the branch and paying. So that's what I mean. Then we have the legal consideration, which is a key aspect, because these institutions will now change from the way they were operating. So the legal framework will be determined by the country they are operating in. In some countries, the law permits the organizations outside the banking system to capture savings directly. In a place like Kenya, you cannot until you are legalized. And that's why I've said you have to be cleared by even your embassies to know that you are coming and you are clean. Wherever you are coming from, you are doing a legal business, and this money that you want to plant in Kenya is not illegally acquired. So that is very important. And then the last step is the specialized operations within now the commercial financial institutions. And when I talk of the specialized operations, a handful of commercial banks have shown interest in taking on the micro enterprise client because they've realized that this is where the money is. So it is possible for such an arrangement to succeed. So it will just call for this informal group to approach. If you recall the way the BRI, the Bank Rakyat of Indonesia started, they were a unit of an existing banking system. And that is how they were able to maneuver and become one of the biggest banks in Indonesia. So you need to run through an established, let's say, bank that has been in existence for some time. And this way you know that when you start, you will not fail. We know most institutions start, or they are going to fail between the 0 and the 6th month. And this is because of the startup challenges that they are going to experience. So to avoid this, you can be housed in an existing commercial financial institution as you take your small steps. And this is what happens to the small MFIs, the likes of Mwalimu Sacco. We have the one for the Kenya Police Service Sacco. They started by being housed in an existing bank. Then by and by, they detach themselves now from the existing commercial bank. Once they run the way they are, once they get the information on the way they are run, they are able now to stand on their own and become autonomous. And you can see the advantages down there. So the major advantages of placing a micro enterprise operation under a commercial bank includes the infrastructure that is already available. It's not easy to have a structure that is watertight. You know, most even the fraudsters or those IT people who steal from the banks, they normally do this at the initial stages. So before the bank develops its infrastructure, they'll take the advantage of the existing loopholes. I remember one of the banks, and I won't name it. I don't want to cause a scare, just in case you are a member of that bank. They were transiting from an old system to a new system. A bank that had a book of like 90 billions lost like a third of it during the piloting stage. Because instead of now doing the piloting, the IT department, and this one was calculated because they were being supported by an IT firm that was operating outside the country. They collapsed the existing system and they put theirs into use. So you can imagine, within the duration of collapse, you know what is expected is piloting. You run the two concurrently. So you are running the old system as you observe how the new one is behaving. Instead, they shut the old system that was carrying all the data and they transformed into the new system. So when they were becoming live, like a third of the money could not be traced. So all the accounts that were belonging to the deceased persons, zilipotea, all the accounts that didn't have any minimum deposit, zikapotea, etc. So you can imagine, it took them a lot of time and it involved a lot of fines before they stood. So of course the bank will find a mechanism of trying to temporarily say that they are under maintenance. And most of these system changeovers happens over the weekend when people are not busy. So when you are coming on Monday, unapata account yako haiko. Leave alone account iko na haina kitu, haiko. How do you start even claiming from the bank that I had an account with you? It was a serious business. So existing or riding on an existing infrastructure benefits you more. Then of course, the second one is now the access to liquidity. If you go into an existing institution, it is already liquid. So you won't have a problem in trying now to get this money as and when you require it. It becomes very easy. And then the commercial orientation. These people already knows how it is done. So you won't have a problem. Any question? Any question? Yeah, very well. Now we go to the policies. Now the policies for promoting microfinance. Now governments in many countries, are the ones who are in charge of the regulatory aspect. And this is because of the, like I've said, the international treaties. You know, when we are talking of receiving money or getting money from people, a different or an alien can just come, a non-citizen. Let me call that person a non-citizen. A non-citizen, whether a legal person or a natural person, can just decide to take the advantage of the existing policy. They'll come into Kenya. Let's say they have a capital that is needed to start the bank. So they'll go and attract or go to the central bank and seek clearance, go very fast and get the company registered in Kenya, then start taking the deposits from the customer. If there are no strict policies, this can easily injure the depositors, because this person can say, for you to access credit in my bank, you need to have, let's say, contributed or saved with us for 6 months. And that time he's just trying to get enough cash or swindle enough cash from the citizens. So after they collect the money for 6 months, they close shop and leave this country. What do you think will happen? It will be chaotic. So the government must make sure that whoever is coming in this country is in sync with the national agendas, what the government is up to, and the goals or the vision that the government has for its citizens, before allowing you to start collecting now the deposits. And this is to avoid instances of even people joining cults. Someone will just come in with some freebies to the informal groups. And I say this is where the money is. So the informal groups will be thinking they are taking advantage of the incoming NGO, but they are the ones who are being taken advantage of. And through this, we've seen the human trafficking syndicates taking care of or coming in as formalized NGOs. We've had cases of where our boys are being sodomized. We've been having cases of where Kenya is being used now as a conduit for smurfing. And when I talk of smurfing, is clearing now that illegal cash. So to avoid all that, the government makes sure that they are in control of whatever is coming into being. So when we are talking of the regulatory or the policy aspect, the government comes into play. And this is enhancing or making sure that the policies that come into play is easier for the programs offering specialized financial services to micro enterprises to become financially self-sufficient. So the government, because it needs now to support the MSMEs who are occupying the 85% of this country's GDP, they'll make sure that it is easier for anyone who needs to bring such a program to be self-sufficient. Two, support the efforts of such an NGO to ensure that they gain the access to the existing commercial sources of funds. Thirdly, they'll support any efforts of that NGO to become a specialized financial institution. Reason being, they need its citizens to be empowered. If you empower citizens, then the country GDP goes up, collection of taxes goes up, so by and by that country becomes also self-reliant. Also encourage the mainstream financial institutions to come up with the specialized products for the MFIs of the micro enterprises to be operating under them. So it is much allowed. So in addressing each of these tasks, first priority should be interest rate deregulation. So the ability to charge full cost interest rate will be the best strategy for any micro enterprise that needs to start lending or become financial self-sufficient. Now, of course, this will be after getting all the clearance. You know, in Kenya, if you want to attract people, The easiest form is you clear what we call the entry barriers. This is what made Equity one of the biggest banks in Kenya. Because when they joined, I remember when you were joining campus, for you to get help in a bank like Barclays Bank, and help used to channel the loans through main banks. Your account should be regulated, your account should have a deposit minimum of 3,000. That was the minimum requirement. So for you to have a bank account, your parents should give you 3,000, which they have never touched all at once. You open an account. Then from there, we used even to be returned. Unaenda unapigwa picha, unaabua. So they used to say no photo me. And remember, the banks used not to take photos. So you could go to a studio, and for you to get the quality of the photo that is needed to open a bank account, my friend, it was an international standard. So you need to go for a passport, not photo me studio, a passport photo. And they used to be expensive. You used to be charged 800, and they could give you 16 of them, and the bank needs only 2. So you are left wondering, where are you going to take 14? So when you try to negotiate, they tell you, no, our standard is 16. So you have to take 16 passports at the cost of 800. Well, it was a pain in the wrong place. That's what I want to indicate. So when Equity Bank came into being, now Equity started as a building society. So they were receiving the customers' deposit, not the customers' deposit, those people who needed to construct the residential houses. They came together and they started giving their money to the building society. So by and by, they grew. But people are coming back for this money. So if, let's say, you are a coffee farmer and you are able, let's say, every day you are harvesting on a good season, every day you are doing like 200 kgs. They used to monitor the card. Once you take your coffee, for those who are coming from the coffee growing regions, there is a card that used to take the coffee now to the factory. So that card was used to access you, whether you qualify to join the building society. So farmers came for the money, wakakujia pesa, wakajenge manyumba, pesa ikaisha. So in 1994, Equity Building Society nearly collapsed. So the only way that they could rise is by converting themselves into a microfinance institution. So they stopped giving the mortgages for those people who are building individual houses, and instead they started taking now the customers' deposit. So they went for a license for an MFI, and this was the game changer for Equity. That disruption changed everything. They came up with a mechanism of ensuring that there are no entry barriers. So they didn't want you to have minimum deposit. You are not needed to have a photo. You could just walk to any Equity branch. Si lazima uoge ukienda kwa branch. Actually, they opened doors to that mwananchi, the areas that were unexploited. And that is how they got the rich customer base. So farmers, everyone, those who are doing menial juakali jobs, they joined. Ukienda kwa bank, you used to be taken a photo and being given a temporary card as you wait for your ATM. And you could operate using the temporary cards. You can walk to any branch, get money. Right now, as we are talking, Equity Bank, the other day, they were recognized as the best bank in Africa. And the reason why they've made the tremendous, and imagine Equity Bank became a commercial bank in 2008. So they operated as an MFI from 1994 to 2008. But because they had now expanded and everyone could believe in them as a listening and caring financial partner, they were given a license to operate as a commercial bank. As we are talking right now, Equity is not even a bank. It is a group, it is a multinational. When the director was giving, Dr. James Mwangi was giving an acceptance speech now for the award, he said by 2025, they want to hit $1 trillion in capitalized assets. So we are talking about 10 times the GDP of Kenya from a bank that started in 2008. So anything is possible. With the goodwill of the government, and the lenders are trusting, not the lenders, the customers are trusting in you, then there you are and you take off. So that was a story of Equity Bank, which started as a building society, momentarily became an MFI, then became a commercial bank. They are now a multinational. We go on. So I've said the government, lenders, and donors, they can lead the way by changing the attitude through making the policy determinations. And when we are talking of the policy determinations, is what can you lend to which customer segment and at what interest. So all these organizations must be in sync between now the government, who is the regulator, the lender, who is now giving this money, or the financial institution, and the donor, who is willing now to come and donate or give that money through a financial institution. Secondly, the interest rates on deposits should also be allowed to rise. And by that, I mean, the more you save, the better. In our country, you know, we have those strict rules. Like if a fixed savings account is attracting 8%, whether you keep 100 or you keep 1 million, you'll still get 8%. So it doesn't make sense. So we are trying to say that if the bank can flex their policy such that that person who is giving more is given more interest, this could attract more depositors who are willing to save. Instead of taking my money to Nairobi Securities Exchange, where it is at risk, I'll be interested in bringing the money to you, because I know at the end of the year or at the end of the period, I'm going to benefit. Thirdly, regulations governing acceptance of deposits must also be reviewed. Now, this is very hard because we are trying to tighten them. Now, our big brother is US. If you recall, when Obama came into this country in 2015, people used to withdraw money in paper bags. So you can remember the NYS scandal. When Kabura was being taken into questioning, at some point he said that he could go to one of the financial institutions, withdraw over the counter 40 million and put that money in some bags, some paper bags, and walk with those paper bags to pay people somewhere in Ongatarungai or something of the sort. So you can imagine. So what you are trying to say is very hard for the government to flex some of these rules because some of them are international. For example, for you to deposit, if you are depositing more than 1 million over the counter, OTC, you have to present what we call an incident report. An incident report is saying, I'm a farmer, I have harvested, let's say, 300 bags of wheat. I've taken it to NCPB, and here is the delivery note, or here is the supply order. So you see, you have supporting documents to say, this is the reason why I'm depositing. If that is not the case, then you are going to have a lot of illegal money in supply. And that is what was happening in 2015. You remember sometime in 2019, I think February, March, there was some money that was found in Roiro, 32 billion. I don't want to call this illegal money because it was not illegal. So where was this money coming from? Where was it going to? So to ensure that all these regulations are governed, it's a thorny issue in many countries to allow just anybody to start come and accepting deposits. It's not easy. This can open a Pandora's box. Here we are going to have a lot of illegal money in supply, and the government would be able to control. So what did the government do to curb the illegal money that was in supply? The Financial Reporting Center realized that most of this money is in denominations of 1,000. Hii pesa mingi ya ukora ilikuwa in denomination of 1,000. So the best thing to do was change or convert all the old 1,000 notes into new ones. That is the only way that the government could get rid of the money that is outside there. So if it is illegal money, of course you won't be willing to take that money to the bank. Wakati unaenda kudeposit, bank itakuwa ikikuuliza, sasa hii pesa yote ulikuwa umeweka wapi na ilikuwa ya nini? So a lot of money was wasted. Out of the anticipated, was it 217 million, 1,000 notes, only 210 was received back. So where is 7? That money was lost. Plus, of course, a lot of illegal money that was in supply. We still have some people who are not on mute. Katam. Caroline. I don't know whether it's deliberate because when I call them, they unmute themselves. Very well. Now, I was talking of now the government not allowing because of the, of course, number 4, government have a responsibility to both the depositors and the financial institutions, of course, to build that depositors' confidence. That's why when a bank is put under receivership, the first place is central bank taking that bank to cushion the depositors from losing their money. So through the CDIC, the Central Depository Corporation. So we ensure that the customers' deposits are safe before any other mechanism is taken by the bank. Then we have the macroeconomic management. Now, a good macroeconomic management and rural development are required for the sustainable development of a successful rural banking system. Of course, for the rural banking system to take place, we need to have the inflation control, deposits must be mobilized, financial institutions must be permitted to set interest rates, and this all will attract people to go and save or to go and lend from such a financial institution. In some circumstances, local financial institutions may function well in absence of these criteria. And we are talking about, I was giving you an example that a Shylock placed somewhere in Kangemi, I don't know whether it is you or another group I was giving an example, will have more customers than Equity Bank branch in Kangemi. Reason being, Equity Bank will have stringent measures before they give you that credit. A Shylock will just want your Mulikamwizi or your phone or any other collateral, like a flat screen. Wenda ulete TV yako, kama unataka 3,000 nikupatie. The bank cannot accept such collaterals. Then the other thing is the political stability. A reasonable level of political stability is also required. So for people to be to have that disposable income that they can save into the bank, these resources need to be mobilized by an enabling environment. Now, you remember the 2013 clashes that happened in North Rift. It really crippled many businesses. So political instability will normally come and destabilize the financial or the micro enterprises that were trying to come into being. When we talk of the political stability, we have a lot of changes in the regulations. So today we are told the interest rate is 10%. Tomorrow it's 15%. Before you even 1 week is gone, again it is 20%. This way, we won't be stable. So macro stability is required for voluntary savings to be mobilized. And this, of course, it will automatically have an effect, a trickle-up effect into the institutions that are practicing in the financial institutions. Then market analysis, we are about, and staff training. For you to have an enabling environment, the staff need to understand the market they are operating in. So we need to do a trend analysis and understand if we give this product to the market, is it in psych? Will it resonate with the people who are here? So for you to do successful rural banking, you need to analyze that market and know what people need. Could be the market is populated with mama mbogas who every day needs a capital of only 500 shillings. You are here, you are saying that the minimum credit that you can give is 10,000. Where are they going to take the 9,500? This money will be embezzled and they won't be able to pay. So you are supposed to be so flexible through analysis to understand the operating environment. Also, your staff must be willing to get to learn the culture of the people in the environment they are operating in. And this way, they'll be able now to operate, or it will be in sync with the existing groups or the cadre of clients that you are looking into. Leadership, effective leadership also is essential because you'll be able to prioritize on what will make you successful. Now, if you are not a leader, or if you are not to very fast learn what is expected of the customer, you will lag behind. It will take you some steps, or it will take you a long time before taking the steps necessary to become a self-sufficient financial institution. Then coordinated planning. Most banks will find that depending on the credit that the customer needs to, depending on the credit that the customer needs to access, the authorization levels changes. So you'll find the branch has been given the mandate of only authorizing up to 1 million. So kama customer anataka loan ya 5 million ama 10 million, unless the authority ikuje from the head office. So when you are talking of the coordinated planning, we need to know how after we mobilize now these savings, because it is voluntary, no one is coercing us. When we require now the facility, is it so well coordinated such that we won't be sent? Because what will happen is the branch will do all the, it will do all the work for the group, for them to access that 5 million from the head office without necessarily the group knowing. Well, they can tell the leaders of the group, pesa kama hii lazima itoke head office, but they won't do the request and everything. And it should be so seamless such that the customer trusts in the process. If they don't trust in the process, even mobilizing whatever small they were mobilizing will be a catastrophe. It will be a problem. Then we have the rural-urban financial intermediation. Now we are having a lot of, and the government, you can see what the government is doing through devolution, which was a very good idea. Initially, we used to have a lot of rural-urban migration, and people are moving from the rural areas, coming to the urban or the peri-urban areas to look for opportunities. Right now, it is the other way. People are moving from the urban centers going back to mashinani. Reasons being, the financial intermediation has been taken down there. Banks, jobs, opportunities, everything. The government is trying as hard to ensure that even that person who is in rural Garissa is able to access the banking facility more or less same as the person who is in Nairobi. They may occasionally have network issues, but they are ensuring that opportunity for expansion is for everybody. And this way, we are having now the rural financial intermediation and the urban setup. It is seamless. And this is what is making now the financial sector become so vibrant. Initially, it was volatile because if I was the person who was, let's say I was the breadwinner, nilikuwa nafanya kazi ya mjengo mahali kama Nakuru. Then I leave Nakuru, I come into Nairobi. If I had opened, let's say a financial account with an existing MFI or SACCO, I will stop. Nikikuja Nairobi, I start operating in a big bank. So what was happening is we were having volatility in the MFI instead of growth. But the rural urban financial intermediation has really made this to be vice versa, or the opposite. Then you have the social and the economic profitability. And we go back to the case of the Bank Rakyat of Indonesia. We could see what the Rural Bank of, or the People's Republic Bank of Indonesia was doing. And through giving the small credits at the less interest, by and by, they were able to empower the groups that were down there. And it had a ripple effect because these people, once they are empowered, they are able to do their microeconomic activities and by stand on their feet and start saving. So you can imagine you didn't have any resource. The bank has trickled down the resource. You've become independent. You've now started producing. Through this, the social and the economics of these people now started growing. And this is what caused now the bank to by and by came into being. Now, this social and economic profitability, of course, the effect to the bank is positive. And that is how any bank will be looking into. Even the equity case, you said they started by ensuring they've lifted all the entry barriers, welcoming or opening the doors to everyone. No one was needed to come with anything. After they empowered them, right now as we are talking, even the big corporates are going into that bank. Now, how do we mobilize the savings? Now, throughout the world, many cultures, income groups, people, they save because of different purposes. Among them, someone will save because of an emergency that might hit them unexpectedly. People will do this to grow their proceeds. Others will do this so that in the future, they have something to take care of them, especially in rainy days. So I'll be having some 100,000 in the account, waiting unexpectedly. Anything can happen. My employer can just tell me, we no longer need your services. So as I look for another place to earn a bread for my family, I'll be taking care of the amount that I saved will be taking care of the daily upkeep or the consumption. Some do this because of social obligations. There are those people who are in groups. So mmeshikana kama cousins na mmekubali every quarter mtakuwa mkipeana 1,000. And then this money for cousins, most of it will be spent in December when they come together. So tunaongea maneno ya social obligations where people will be, let's say a family comes together and they decide will be giving money into a kitty. Unaona mzee na mama wanaendelea kuzeeka. In case wagonjeke, we can take care of that. Some will do this because of putting something for their children. I'll advise you to have an education policy instead of keeping money because the policy will be growing. Some will do this for traveling. If you are Christian, you want to go to Israel and float on Dead Sea. If you are Muslim, you are planning to go to Mecca someday. Others will be doing this because of saving for sickness. Instead of doing this, take a health insurance or a medical insurance. So I'm going as I advise. Some are doing this for disability. Instead of this, just take a life policy. If you are disabled or if you die, it will take care of you. Some are doing this because of retirement. Instead of keeping money in the account for retirement, just start subscribing into a pension fund. It will come in handy when you retire. So these are some of the areas that will make people be attracted into any savings. So we can see most people will mobilize or they move around looking for savings to ensure that at some point in time, if any of these 9 areas hit them, they'll be in a good place. Now we do have MEF. Now the 2 widespread myths that prevails are: 1, pervasive rural under savings. People believe, even yourself, that in the rural areas hakuna pesa. Now people believe that watu wa Nairobi ndio wako na pesa. If you go back, I used to see my grandmother doing the mattress banking, and I can tell you the kind of cash that she was holding. It was good enough to run the family for 3 months. But the person who is purported to have money and coming from Nairobi has nothing. It's only that man's salary. Na ukienda shosho unampatia 1,000, anaongezea kwa mattress banking yake. So who has money? The people who are down there have more money. If you are coming from the rural area, your only expense will be sugar and cooking oil. All the other things, as far as subsistence is concerned, you are getting it from the shamba. A Nairobi family, a stable three households family in Nairobi needs like 200 shillings to feed yourself for 1 meal. So every day you must have like 600. 200 for breakfast, 200 for lunch. For supper, you might need more money. So we are talking of like 500 every day. In a month, that will be 15,000. In the rural areas, I've said you just need a jerrycan of cooking oil. The milk is coming from the cow, maybe, and some tea leaves. Na wengine majani chai wanapewa kwa factory because they are members there. Secondly, is the assumption that demand for financial savings instrument is low in most rural areas of developing countries. It's a myth. Because most MFIs are developing, or their grassroots is from the rural areas, we must demystify this myth that there is no money in the rural areas, and 2, they don't have a saving culture. If you are able to demystify these 2 myths, then you will be home and dry. So the reasons for lack of deposits will be: 1, low institutional deposits will be necessitated by the under savings, because these people are made to believe that they don't have money. I can give you a case of someone who is, let's say, doing avocado. 1 avocado is going for 2 shillings. 1 avocado tree can give you, let's say, 100 fruits. So if it gives you 100 fruits, then you are going to have 200 per tree. If you have such 10 trees, that is 2,000. Assuming those people who are buying these fruits come even weekly, and you have such 100 trees, you'll be earning more than 200,000 in a month, and you're in the rural areas. Na nimepeana case ya avocado. Now avocado si kama kuku. You see, for kuku you have to feed them to give you the eggs. An avocado, you plant it, it's there. It's a seasonal tree. Wewe unangoja unaanza kuharvest your avocados. So the culture of lack of deposits is because people are made to understand that they cannot save. So whatever they get is hand to mouth, which is so bad. Secondly, the low interest rates. The low interest rates means that the MFIs who will run from these areas, they will not be able to mobilize enough profits to sustain themselves. And then organizations dispensing subsidized credit, another error. And we say the 4 levels of becoming self-sufficient is first ensuring that the subsidy is not there. If you want to become a structured financial institution, the first one, you first empower the people. They start producing or they become economically viable. Then you lift all the subsidies to make these people autonomous. From there, you start charging them interest rates, the prevailing market interest rates. If you do this, you are going to shatter the myth and you are going to take off as an MFI or a microfinance institution. So what we see here as savings, you can find someone having a whole granary of grains, saying that this will take me up to the next harvest, right? Some will invest money in animals. So nauza grains, if I'm a maize farmer, I sell maize, I buy 2 cows, another blender. Some, of course, these ones are not in the rural areas. There are people who invest in jewelry. Unapata mtu ako na saa ya 10 million. Na ile trouser amevaa ni ya Gikomba ni ya 200 shillings. Of course, you cannot steal from this person, isn't it? So some people will have jewelry that are very expensive. And if you go in the custodial services of the banks, this is when you realize that this happens. If you keenly watch what our politicians wear, most of them, they have a higher propensity to the jewelry. So you will find someone wearing a watch that is worth 3 million, earrings that are worth 1 million, etc. A ring that is worth 3 million, and they are there. So they'll go and deposit this jewelry to the bank as a collateral for loan. So yeye atakuwa akisema hana pesa, lakini pesa iko kwa jewelry. So they'll only be going to the bank when they need to do an anniversary. So anapewa pete yake, bank wanampea what we call a butler at a fee. So bank inakupea askari, ukienda ukimaliza anniversary, pete yako unatoa unarudishia the butler. Butler anarudisha kwa custodial services in the bank. There are people who will do that. Then some will invest in land, which is not a bad bet, because for land in Kenya, our land is willing buyer, willing seller. You would go wrong. If you save today in land, you know that sometime to come, you are going to get more money than you invested. Then 3, and we are coming to the tail end. You can see my time is really running. Now, when we are talking of the financial savings at the local level, we are talking of the household, enterprise, or the group savings. These are the people who makes the informal financial market. And there is this term, they are so ubiquitous. It means abundant. It means there are so many. This is where the people are. We can look at the synonyms. It means universal. You can say abundant. There are so many. So most of the people who are lying outside there in the formal, quasi-formal, or the formal sector, there are so many. We just need to take this gospel of savings and we'll be home and dry. Now, although they are largely unregulated and unreported, it has long been recognized that these markets are not unorganized. They are so organized. And if you want to know where the money is, I told you, kwa hizi chama za kina wamama and the like, that's where the money is. You will find mama wa soko wako na chama kama 3 na every week anaweka 500. So they are saving 1,500. Lakini ile pesa anaweza access from that chama is so meager, it cannot help them. If these people are only advised that if they go into the formal financial services, the benefits are more, they won't delve into this black market. Someone will be willing to be doing money changing business ya dollars. Kwa market, ukienda city market utawapata. And the interest that they are charging for exchanging that money, the forex, it's more than what the legal bank is offering. But people fear banks because of the checks and balances. Of course, you can only go to the black market if whatever you are doing is illegal business. So you don't want to be tracked. That is why you are doing it behind the scenes. So benefits of institutional savings are, they are well designed and well delivered. You are also cushioned against loss. I've said, should it become that financial institution where you are saving is going under, the first thing for the Central Depository Corporation will be cushioning the depositor not to lose their money. So benefits to households will be, you cannot lose their money. Then we have liquidity. Benefits to households, we have the liquidity. So you have rapid access to liquid cash. So it is needed as and when you require it. And liquidity is very crucial, especially for those people who are running the SMEs. Unaweza pata umekosa deal ya 1 million because you didn't have that cash there. So if you are looking into going to the banks to try and get liquid, it becomes a challenge. Of course, some banks will be requiring you to give collaterals. Others will be giving they'll always have set their mechanisms of ensuring that whoever is accessing that liquid cash and needed it as and when they require it, of course, there is a procedure that is to be followed. And at times you can lose when you are following on the procedure. So the less the procedure, the more or the better for the person who is doing the SMEs. Then return on deposits. Positive real returns on deposits are typically not available at low risk. In finance, we say high risk, high returns, and vice versa. So if you are the kind of a person who deposited less, you can only expect less returns. So this will hinder, of course, the cash inflow to the households, and ultimately the accounts that are featuring outside there in the banks or where they are savings will not be attractive to them. Then saving for consumption, of course, households, you said they normally put this money somewhere, are waiting for a rainy day because they don't want to be hit. So it is for emergency per se. Then savings for investment, savings for development of household enterprises will be discussed in the subsequent topics. So I don't want to delve into that. Then savings for social and religious purposes, for consumer durables. You have those people who will keep this money waiting for these ceremonies. When people are going for circumcisions, weddings, funerals, name it, some will ensure that they have this money because they don't want to appear as if they had not organized themselves. Then savings for retirement, ill health, or disability. I've given a way out. You need to have a life assurance instead of saving for ill health. Instead of saving for retirement, you need to have a pension fund. Instead of saving for disability, you need to have what we call consequential indemnity, where you know that if anything happens, you've cushioned yourself. Then savings instead of addiction to credit. Now, since micro lending came into this country, the access to cash is not an issue. The issue is savings. Now, if I wanted loan, I can go to Tala, Branch, Okoa, Mshwari. There are so many, they are outside there. And there is this addiction, especially to the youth. Na mtu anachukua hiyo pesa, anaweka kwa bet. Now, if you take this money from the credit, you are being charged an interest. You risk it further, you take it to bet. Then ile ulikuwa umeweka kichwa, you lose. It dents you even more. Had you saved, it would have been otherwise. I've been advising people, for example, if you want to construct a house, now most people when they are, and you will be employed if you are not employed, vijana wengi saizi akiemployiwa na bank, let's say you get employed to, let's say Equity Bank, aanze kukulipa 60,000. The first thing that the bank will do is to attract you and make sure that they commit your pay slip. Ndio hii pesa isikusumbue. So wanakuja wanakuambia we can give you a mortgage that you can be contributing 25,000. You can give you a credit card ya 80,000. And this credit card, you can see they'll always make sure that the credit card pesa iko juu kuliko ile iko kwa account. Reason being they have control. Mshahara yako before ilipwe, they mark lien of the account ya 80,000, wanakata interest yao, alafu wanakurudishia hiyo pesa ingine. Tena credit card ina run for the next 1 month. So utaishi kwa deni. So utaishi ukilipa, tuseme hii mortgage umepewa ni ya 35 years. So if you are employed with the 25 years, at 60 years you'll still be paying the mortgage. So at the time you will be retiring, let's say it's 65 years, you'll always have 5 years, you will have almost 5 years to leave the job. So this time watakwambia, we can only give credit to those people who are between 25 to 58 years. So as you approach retirement, the bank now start withdrawing their benefits. Credit card unaambiwa imereduciwa to 30,000. Mortgage yako ushamaliza kulipa, tuseme huko umemaliza huko na another 1 year that is running. So they ensure that your payslip is bombarded with credit. So my friends, when you get employed, instead of doing this, if you enter into a saving, unaona wanakukata 25,000 every month. What if ukuwa ukiweka 25,000 that month? In 1 year, utakuwa na pesa ngapi? That will be 25. So in 1 year, you will have saved 300,000, right? 300,000 in 3 years, you will be, let's say 4 years, you will be reaching 1 million. With 1 million, you can easily get a piece of land in this country. In a good place, in a hot market. That is 4 years. That guy who entered into the mortgage, na nyumba si yako, nyumba ni ya bank. So wakikufuta, they take bank their house if you cannot pay the difference. Na ile pesa ulikuwa umelipa inapotelea. So avoid credits. Try to avoid credit. Instead, save. If you are going for your savings for a collateral, because there are those MFIs that will do that, we can give you 30% of your savings, the better. Because most savings, they are built on collateral. You have to bring something. Now for this case of an employee, amepatiana payslip yake ndio apewe the kind of products like the mortgages and the credit card. For you, if you're outside the banking sector, you have to take a collateral. And in most occasions, the collateral will be of more value than the amount that you are accessing. Now, benefits to enterprises. Many of the benefits gained from institutional savings through an enterprise is, of course, you have that commingled security, there is returns, there is self-financing. So you would access any, for example, if you are a group of 10 chama, the bank will tell you, for you to access, let's say, pesa ya kununua hii shamba, we want you to pay 20%, the bank will finance you 80%. So you will always be, now here, instead of being asked for the collateral, you see the bank is asking you to encumber, because they know, because of the group pressure, you will ultimately be able to pay. Then benefits to local groups, organizations, and institutions. Deposits instruments that permit savings to be held in the name of the organization and institutions provide significant benefits to the depositors. Reason being, they know you being or existing in this group. There is a way that the group is operating such that they are not going to lose their money that they are going to give you. So it is well, or it is the best form of running an MFI where you are sure that the level of default will not be there. And because members, or there is that group pressure, they'll ensure that they meet their obligations as and when it falls due. We are coming to the end. Benefits to the financial institutions. Deposits mobilized in conjunction with commercial credit programs enables these financial institutions to be sustainable. So it's a win-win phenomenon. And then we have the benefits to the economy or the developments and equity at large. Local savings or the mobilization benefits the economy directly because of the growth of the GDP. The company also, not the company, the country is also able now to meet some of its set goals as a country. And this will encourage also self-reliance, where each person is growing, bringing more to the government, which translates into the government also growing. And momentarily, you'll find now the government trying to make now the operating environment a bit friendly. Now, typically, it ranges between 5 to 50% of the areas charged by the informal commercial lenders, which enables now the growth of the financial or the sustainable. It makes the financial institutions to sustain themselves. Any question? Time is gone. We got 3 minutes. Questions? And we have 3 charts. No, the charts were in line with making the class better. Any question, class? I have a parting question here. Now, the questions that you see at the end of every topic, this is where your exam will come from. I don't expect you to fail when I've already given you the hint. So I want you to attempt the number 3. You describe the benefits of the institutional savings on your own. I'm informed the portal is not functional. So on your own, describe the benefits of institutional savings. If there are no questions, I'll momentarily wind up this class. Any question? Can sample a few. Robert, can unmute yourself. You are well? Robert, you are well? Betty?
Yes.
You are good?
Yeah.
Irene?
Yes.
You are good?
I have a question, sir.
Yes, Irene.
Because the portal is not working, you said we try that question on our own. So is it like a quiz or a discussion question, or it's just for our own benefit?
For your own benefit. That's why I've said on your own.
Okay.
I've said these questions, you see all the questions that are coming after every end of the talk. Those questions are meant to help you revise, right? Byron. Byron, how are you?
I'm fine, sir.
Say something. Sinyamaze tu hivyo, sema kitu bwana. I've talked for like 1 hour, 30 minutes without stopping. Say something.
Yes, I'm good.
You're good?
Yeah, I'm good.
Zain Kerubo,
Yes,
how are you?
I'm fine.
You are fine, we are fine.
Yeah.
Naliaka? Naliaka is the last one. Naliaka,
Yes.
how are you? How are you?
I'm fine.
So you are well. So team, if there is no any question, we are good to go. Enjoy the rest of your day.
Good day.
Good day, sir.
Okay.